I want to come back to something. Actually, quite a few had kind of suggested that some of the earnings update report from a few weeks back was helpful. I want to circle back to that and kind of share an updated version of where we're at. Afternoon, I hope you are enjoying this nice sunshine creeping in here if you're in the Pacific Northwest. We have a bit of a shorter week in trading this week here with the holiday on Monday, but we do have Fed minutes, to break down, and a bit of an earnings season updates kind of backed by popular demand. My name is Brandon Steele, financial advisor with Mainsail Financial Group here in Bellevue. And our goal every Thursday at 3 is to bring to you the market news, the data, the trends that we're watching, and hopefully weed out some of the noise along the way. So again, this week, we do have a bit of a shorter week for those who, kind of pay attention to market holidays. Monday was a market holiday, so markets were closed. So basically Tuesday to Friday as far as trading goes here this week, and therefore a little less in data, but important data nonetheless. And maybe to start, let's kind of kick us off by rewinding to last Friday. For those who tuned in last week, you may remember that CPI data came out, Consumer Price Index data came out earlier in the week. So we spent a lot of time last Thursday talking about inflation. Well, the part two of that was Producer Price Index data, which came out on Friday. And probably no surprise for those who tuned in last week. Again, inflation came out higher than expected. Same applied for the producer side of it as well. So Producer Price Index data certainly came out a little higher than expected there on Friday. And then fast forward to this week, and really yesterday is probably the highlight of this week's data, which is the Fed minutes were released on Wednesday. And to be honest with you, I don't know that there's too much to break apart here, except the general theme that we had touched on after the actual Fed meeting itself, which is that really the theme seems to be that there is no big concern from the Fed's perspective or driver to really cut rates sooner than later. So the minutes showed this, obviously the Fed press conference and decision showed this as well from a couple of weeks back, but the Fed minutes also, reflected this same kind of takeaway, I guess. And, I don't think it really surprised anybody by any means, but maybe just a reinforcement behind the idea that the Fed is likely to keep rates higher for longer until we do see clear evidence that inflation has come back down. I almost feel like I sound like the Fed saying that, but you get the idea. Fast forward, kind of looking ahead here next week before we get to our question of the week about earnings. Coming up next week, we have home sales, we have income, we have spending, and another inflation data point with PCE inflation information coming out there next week. So be sure to tune in next Thursday where we'll break apart home sales data, again, income and spending, and then PCE inflation data as well. But before we break here this Thursday, I want to come back to something. Actually, quite a few had kind of suggested that some of the earnings update report from a few weeks back was helpful. And so now that we're a little further into earnings season, I want to circle back to that and kind of share an updated version of where we're at in this earnings season here to kick off 2024. So if you haven't listened to the original, feel free to kind of tune back. I think it was 2 or 3 weeks ago where we kind of break apart where earnings were at that point. Fast forward to here where we are in mid to late February. And really the data I'm going to be talking about would be reflective as of last Friday. So this would be February 16th and backwards. But at that point, a huge majority of companies have now officially reported earnings. So I figured that this might be a helpful update with a little more data behind us. And the reality is a good chunk of companies have beat earnings expectations. So you might remember from that session that we'd shared a couple of weeks back, a lot of times companies beat earnings expectations. It's typically more companies that beat than don't because of the way expectations and analyst ratings and targets kind of are factored in. So it's not out of the norm, but I will share that, really the earnings season looking back was actually pretty strong, and the actual earnings beat as far as how much they beat expectations was higher than expected as well. So in general, the previous earnings season actually looks pretty strong. However, the one thing I do want to point out is that a lot of times when companies report their earnings, they also report their guidance or their expectations or forecast into what they might see in the coming year ahead or quarters ahead. And so that's really where I want to focus. Although I will share, it's very good news that the earnings reports were stronger than expected, because from a couple weeks back, it looked like maybe a trend of not such great earnings. That certainly reversed course over the last few weeks here. But the thing that did remain the same is that a majority of the companies who suggested their forecast moving forward had actually kind of shared a negative, reversed their guidance. So in other words, if they shared a really positive guidance, they might have downplayed what that might look like. So for instance, if a company said, okay, coming up next year, we expect that we will do $1 billion of revenue. And then they came out this last quarter and said, actually, it looks like we might do 990 million, right? That would be what I'm really referring to here. And the reason I share that is because there's a much larger amount of companies that revise their future guidance downward. So again, that example I just laid out, right? They said, actually, we're probably not going to have quite the earnings we expected as we look ahead into 2024. Now, there were a number of companies who still suggested that they might actually expect more ahead in 2024. But again, there were certainly a lot more companies that revised downward on their guidance ahead for the year. So that was the one thing that I really wanted to focus on. Everything else was really positive, or has been really positive so far, and certainly showed some great signs of companies' strength looking backwards. But that is really important, because the way stock prices are viewed is basically how much we're willing to pay for future earnings. And so if earnings come down, that might mean we're willing to pay less over time. Now, again, one earnings report, we'll see what comes, and we'll see what happens with inflation and the Fed. But nonetheless, that is a very important factor in all this as well. So thanks for tuning in. Be sure to kind of check it out next Thursday. We'll be talking again about home sales, income, spending, and yes, inflation again as well. Have a great upcoming weekend. I think the sun is supposed to keep shining for a bit, so hopefully you can get out and enjoy the sunshine. We'll see you next Thursday at 3.